I work for Elevator Ventures. Elevator Ventures is the corporate VC of Raiffeisen Bank. Myself, I have been with the team for 3 years. I'm an investment principal. I've been in venture capital for roughly 10 years now. Did a few deals, mostly in Europe, some in the US, some in the Middle East as well. And yeah, looking forward to working with Innovix Moonshot. Innovix anyway has, as an organization, has a lot of experience in building such programs, and I think it was mostly built around basically user feedback or market feedback. Yeah, so they wanted to do something that can help both the entrepreneurs and the founders and the businesses that they come across, as well as obviously those interested in investing in them. And I think building such programs around experience and around sharing knowledge and knowledge transfer bears a lot of fruit. I mean, obviously, most of who call themselves experts cannot really tell someone how to succeed. That's rarely the case, but they can definitely tell them sometimes, at least in most cases, what to avoid so that they don't fail. And that's already valuable knowledge in many cases. Obviously, this comes, of course, with exploring synergies, partnerships, potential for business, joint venturing, and so on. So I think overall, such programs are always helpful, especially in this regard. That's a good question. I mean, our expectations are always high simply because of the level of performance that we've seen working with Innovix. So we always expect to meet impressive founders, impressive business owners, top-notch individuals who have been working hard at building their businesses. To be completely honest, we know that this program in particular is not, let's say, focused on venture-backed businesses. So even though we understand that as a fact, we still nonetheless, as a venture capital fund, and me myself as well, we are interested in supporting such programs, at least from the perspective of staying connected to the market. But then also because we very much know that many of these individuals who now run these businesses potentially can become startup founders, and we are in the long-term business. So the impressive people we meet today probably are tomorrow's investments as well. So it's always a pleasure to be a part of this. I understand the need to define it as a new context. Yeah, obviously, I have not, as I mentioned, I've been in this industry only for 10 years, so I have not really seen all the cycles. But you don't have to see all of them in order to understand them. You can read through the dot-com bubble, you can read through the 2008 financial cycle, and overall, what you can always tell is that people forget that this is cyclical. Yeah, so they tend to think this has never happened before, and they tend to also try to somehow come to terms with reality and assume a new paradigm. I would say these are, the time or the lack of funding or the cyclical nature of funding and the pressure around valuations. This is cyclical anyway. Yeah. So this is not a new paradigm. There are new paradigms. The new paradigms that we are looking at obviously include major conflicts around the world. They include an erosion of value of currency. They include also an erosion of, let's say, or a threat towards markets and free markets and so on. These are what the paradigms that changed in the last few years. If you want to look at something, look at the paradigms that changed. And I would say, if you want to weather a winter, if you want to call it a funding winter or a financing winter, it's the same principles as you should have anyway applied when it was also rosy and a spring, if you also want the opposite of it. Yeah, it's just work hard at having the best unit economics, or at least at improving your unit economics continuously. Obviously here you need workable business models, scalable business models, and of course at the end of the day you really need to be building a proper value within your business, that you're basically trading for money. These are simple basic principles that probably many people have mentioned them and said them way better than I would, but they don't differ, they don't change because it's a winter. They don't become let's say more relevant because they are not if you are not building the business with these things in mind, Of course, when you have a bit more financing or the possibility of financing, what happens then is that you spend less time raising funds, maybe. But that doesn't change the nature, or it should not be a factor that changes the nature of your business. Sure, it could kind of hinder new founders to step into this because obviously the risk barrier or the risk threshold is higher than what it used to be in such levels. But that's natural selection. Yeah, I mean, if what you are building is not, or if you are not really keen on building what you want to build, assuming the risk that comes with it, which is always the risk of failure, etc., etc., then you're better not building it. Yeah, you're just better not taking that risk, and that could be for any reason. It's not just, it's not like you're not a risk taker. No, obviously everyone is a risk taker at a certain level, but these times just change that a bit. Yeah, so I would try always to extract myself and everyone I work with and the founders we talk to from the paradigm of less funding. It's definitely there, and it's not a reality. Yeah, it's a real thing. But the practicality of it is that, okay, extend your runway, make sure you're a bit tighter as a business, make sure you start fundraising earlier, etc. So there are tips and tricks to work around it. But when you extract yourself, and of course when you deploy the right tactics, the most important thing is that put yourself in what is the paradigm of the market today, and then work on improving your business accordingly anyway, regardless of the fundraising environment. It's good that you mentioned AI. Yeah. Obviously, again, it's a hype, and there is a hype everywhere. Yeah, but let's take ourselves a bit outside of the hype, and at least that's what we believe. And we think that AI maybe is not the right term, but surely anyone that comes in today, not embedding a level of machine learning in the value proposition they are building, is missing on an opportunity that again impacts their unit economics, growth trajectory, ability to deliver, etc., etc. So we expect any business, any technology business, even non-tech businesses, to really deploy a certain level of machine learning. Generative AI capability is a capability. It's a tool. It's as good as a tool as, Microsoft Excel when it came out. Yeah, I mean, probably different, of course, but the parallel is there. And if you want to use that tool, and we expect you to use it, because obviously it makes you way more scalable. If you have heavy customer interaction, if you have content creation, if you have certain screening that can be automated. So there are many things that you can automate with generative AI. So do we expect businesses to be, as they call it nowadays, AI first? I don't know what that means. I honestly have no idea what that means. I'm not an AI expert on any level. But if you approach us and you want funding and you want to say you're high growth and you are not deploying automation techniques and you are not reiterating on the accuracy of your work or the product or the value proposition, possibly deploying machine learning, even the simplest form, then you're probably anyway not competitive enough in this market. That's what I want to say. It's not about you being the greatest AI scientist. Just about using the tools available, and then of course there are those that are truly navigating this technology with amazing propositions and value propositions and products. And those we would be lucky to see them as well. And those are probably what you can say AI. But we as a fund, I can tell you that we are definitely applying an exclusionary criteria. Yeah? Anyone who's not deploying tools that help them become more competitive and more efficient is probably not making use of the tools of their time. Yeah, and these are the tools of our time now. So you use them, you have better chances of becoming competitive if you use them well. Yeah, some people spend too much. I mean, let's maybe put it just very quickly. There are many people who are using machine learning at a huge cost, and they are unable to apply it correctly. So they would say and claim, yeah, we have machine learning algorithms, but then the training and the deployment of the models, super costly. So that actually made them probably the opposite of competitive. And there is sometimes, not enough chances and opportunities to go back and revisit those wrong decisions. So again, it doesn't make you virtuous immediately that you use this. Yeah. So I would say we as a fund as well, of course, sector-wise, we are looking a bit broader. We're looking at cybersecurity. We're looking at legal tech and reg tech. We're looking at climate resilience. And of course, it's overlaps with fintech. Obviously, we are open to all of these sectors, plus financial technology, infrastructure, embedded finance, etc., etc.